Hello, everyone. Welcome back to Today Assets Report, your trusted source for the latest updates in crypto, markets, and financial innovation. Today's story is creating major waves across the digital asset world, as the tides may finally be turning for one of the most talked about companies in crypto. The headline says it all. Tides have changed. Ripple CEO predicts big wins for Clarity Act, XRP. Over the past few years, the crypto industry has faced uncertainty, regulation debates, and dramatic price swings. But now a new sense of optimism is emerging. According to Brad Garlinghouse, the tone in Washington is shifting, and that shift could bring clearer rules for digital assets and potentially open the door for stronger adoption of XRP. Investors, developers, and institutions are watching closely because regulatory clarity has been one of the biggest missing pieces in crypto growth. If the environment truly changes, the next phase of the digital asset market could look very different from what we have seen in recent years. For a long time, uncertainty around regulation has acted like a heavy cloud over the crypto space, slowing innovation and making investors cautious. Ripple has been at the center of this conversation, especially because of its high-profile legal battle with the U.S. Securities and Exchange Commission. That case became one of the most closely followed legal events in crypto history, shaping how people think about digital asset classification. Now Garlinghouse says the mood inside policy discussions is changing. Instead of focusing only on enforcement, lawmakers are starting to talk more about structure and clarity. This shift matters because businesses need predictable rules to build long-term products. Without clarity, companies hesitate to expand, and investors remain unsure about risk. But if legislation like the Clarity Act moves forward, it could provide definitions and frameworks that allow the industry to grow while still protecting consumers. Garlinghouse recently shared his perspective during public interviews and industry discussions, emphasizing that the crypto sector is entering a new stage. He described the moment as a turning point where policymakers are beginning to better understand the difference between various types of digital assets. According to him, early misunderstandings led to broad enforcement actions that created confusion instead of structure. Now, with more education and market maturity, the conversation is becoming more balanced. He pointed out that lawmakers are asking deeper questions about how blockchain technology works and how it can improve financial infrastructure. This evolving understanding is one of the reasons he believes the Clarity Act could gain momentum. For XRP supporters, this message has sparked renewed excitement because clearer classifications could directly influence how the asset is traded, adopted, and integrated into payment systems across global markets. One important factor driving this change is the growing involvement of institutions in the digital asset ecosystem. Over the past few years, major financial companies have explored blockchain for cross-border payments, tokenization, and settlement solutions. Ripple has consistently focused on real-world utility, particularly in the area of fast international transfers. Garlinghouse highlighted that institutional interest often pushes regulators to move faster because large financial players require stable frameworks before committing significant capital. This connection between institutional demand and policy development is becoming more visible. As more companies experiment with blockchain efficiency, lawmakers are recognizing that digital assets are not just speculative tools but also technological infrastructure. This broader perspective is helping reshape how crypto is discussed in policy circles and may contribute to the progress of legislation designed to define the industry more clearly. Another major reason behind the optimistic outlook is the increasing bipartisan attention toward digital asset regulation. Members of the United States Congress have introduced multiple proposals aimed at defining how cryptocurrencies should be categorized and supervised. While disagreements still exist, the fact that these conversations are happening more frequently suggests that the topic is moving closer to concrete action. Garlinghouse emphasized that progress does not happen overnight, but the direction matters. Instead of debating whether crypto should exist, lawmakers are now discussing how it should function within the financial system. That shift alone signals a major change compared to earlier years. Investors are interpreting this as a sign that regulatory clarity may eventually reduce market uncertainty and allow stronger participation from both retail and institutional players. For XRP specifically, regulatory clarity could influence market perception in a powerful way. Over the past few years, the asset's price movements have often been tied to legal developments and regulatory headlines, rather than purely technical or adoption factors. When uncertainty increases, volatility tends to rise. When clarity appears, confidence often follows. Garlinghouse noted that once rules become more consistent, the market can focus again on utility and performance rather than legal speculation. XRP's primary role in facilitating fast and low-cost international transfers positions it differently from many other digital assets that are mainly used for trading. If regulatory frameworks recognize these distinctions, it could strengthen XRP's use case and attract additional partnerships across global payment networks. Market analysts are also watching how sentiment is shifting among crypto investors. Social discussions, trading patterns, and institutional commentary all suggest that optimism is slowly returning after a period of caution. While price action always carries risk, sentiment often plays a powerful role in shaping market momentum. When investors believe that regulatory barriers are decreasing, they tend to look for long-term opportunities rather than short-term speculation. Garlinghouse's comments about the tides changing have added to this growing sense of anticipation. Even though legislation still requires debate and approval, the tone alone can influence how investors position themselves in the market. This psychological shift can sometimes become a catalyst for broader market recovery, especially when combined with improving macroeconomic conditions. Another important aspect of this story is the global perspective. While the United States has been working through regulatory debates, other regions have already introduced clearer crypto frameworks. Countries across Europe and parts of Asia have established licensing systems and compliance structures that allow blockchain companies to operate with more certainty. Ripple has expanded its presence internationally during this period, building partnerships in regions where regulations are more defined. Garlinghouse has often pointed out that innovation tends to move toward clarity. If the United States strengthens its regulatory approach through legislation like the Clarity Act, it could attract more blockchain development back into the country and increase competition in the financial technology space. The conversation around regulation is also evolving because blockchain technology itself has matured. Early crypto discussions often focused heavily on price speculation, but today the focus includes infrastructure, payments, tokenized assets, and decentralized finance tools. This broader understanding is helping policymakers recognize that digital assets represent an entire technological ecosystem rather than a single category. Garlinghouse explained that education has played a major role in changing perceptions. As lawmakers meet with developers and financial experts, they gain deeper insight into how blockchain systems operate. This educational progress may be one of the key drivers behind the increased optimism surrounding upcoming legislation. Investors are also paying attention to how Ripple continues to position itself strategically despite past legal challenges. The company has emphasized compliance, partnerships, and product development while waiting for clearer regulatory outcomes. This long-term approach has helped maintain interest in XRP even during uncertain periods. Garlinghouse's latest comments reinforce the idea that Ripple believes the environment is finally moving in a favorable direction. By focusing on real-world applications instead of short-term market hype, the company aims to demonstrate that blockchain technology can solve practical financial problems. This strategy may become even more effective if new legislation reduces uncertainty and encourages wider adoption. From a broader market perspective, regulatory clarity often acts as a foundation for growth cycles. Historically, financial markets tend to expand when rules become more predictable because businesses can plan investments with greater confidence. The crypto market may follow a similar pattern. If legislation defines how assets are categorized and supervised, it could reduce fear among institutional investors who have been waiting for clearer guidelines. Garlinghouse believes that this stage is approaching, and his confidence has become one of the main reasons the story is gaining attention across the crypto community. Another interesting point is how public perception of crypto is gradually shifting. In earlier years, many people associated digital assets only with volatility and risk. Today, discussions increasingly include innovation, efficiency, and financial accessibility. Blockchain technology is being explored for supply chains, identity systems, and payment infrastructure. This expanding narrative is helping reshape how policymakers and institutions view the industry. Garlinghouse noted that when understanding improves, regulation tends to become more balanced. Instead of reacting to uncertainty, lawmakers begin building frameworks designed to support innovation while protecting consumers. Even with the growing optimism, it is important to remember that legislative processes take time. Bills must go through debates, revisions, and approvals before becoming law. Market reactions can sometimes move faster than policy timelines, creating short-term volatility. However, Garlinghouse's message focuses on direction rather than immediate results. He emphasized that progress is visible and that progress matters for long-term industry development. Investors are encouraged to watch policy developments carefully because regulatory changes often influence market structure in lasting ways. The potential impact on XRP adoption is one of the most discussed parts of this story. If regulatory clarity strengthens confidence among banks and financial institutions, cross-border payment solutions could expand more rapidly. Ripple's technology is designed to reduce transaction time and costs compared to traditional systems. With clearer rules, institutions may feel more comfortable integrating blockchain tools into existing financial networks. This could increase transaction volume and strengthen XRP's role within Ripple's ecosystem. While outcomes are never guaranteed, the possibility alone has created renewed excitement among supporters. As the crypto industry continues evolving, moments like this highlight how closely technology and regulation are connected. Innovation often moves quickly, while policy development takes more time to adapt. When both begin aligning, growth opportunities can expand significantly. Garlinghouse's statement that the tides have changed reflects this potential alignment between innovation and regulation. Whether the Clarity Act advances quickly or gradually, the conversation itself signals that digital assets are becoming a permanent part of the financial landscape. That brings us to the bigger picture for investors and market watchers. Regulatory clarity does not just affect one company or one asset. It influences the entire digital asset ecosystem. When rules become more defined, competition increases, innovation accelerates, and adoption often follows. The coming months could be especially important as lawmakers continue discussions and industry leaders share their perspectives. For now, the message from Ripple's leadership is clear. Momentum appears to be shifting, and the crypto market may be entering a new chapter driven by structure, confidence, and long-term growth. Stay tuned to Today Assets Report for more updates as this developing story continues to unfold.